Welcome to Business Talk on Business Tech, South Africa's #1 business news website. And talking about business news, I think everyone knows that small businesses have been hard hit by this pandemic. And I think starting a small business is just tough in any environment, but it's even tougher in this economy. And it's particularly because credit markets, when they do tend to tighten, it can be challenging to get funding. And the unprecedented challenge of a global pandemic has required that small and medium-sized businesses really are adaptable and flexible and all of those things that we hear about all the time. And to give our SME owners insight into the latest industry intelligence and some practical tips on how they can be a little bit more resilient, we've invited Karl Westvig, the CEO of Retail Capital, to share some insights from his vantage point as a top lender in the alternative space. Karl, great to have you on the show. Great to see you again. And we've spoken several times through the pandemic. I think it's trite to say that COVID has just changed everything, fundamentally upended the world that we live in, including how we conduct business and the products we sell and how we sell them. Now, your business is essentially a provider of funding to SMEs. So I suspect you would have been rather busy over the last 18 months.
Hi, Michael. Great to be here again. Yeah, it's been a roller coaster ride, and not just for us, but for our businesses, the business we fund. So to give you a small insight, in April last year, 90% of the businesses we funded weren't trading. So only 10%, the essential services were allowed to trade, 90% weren't trading. In the second lockdown, we saw about a 15% impact, 15. And in the third lockdown being July, another 15%, 15% down. So, and bear in mind, these businesses have been through multiple cycles. So whatever resources they needed to survive the first wave got taken in the second wave and the third wave. And now they're in a position where they don't have the resources, and small businesses don't have access to lots of capital or lots of funding or strong shareholders or et cetera, like the big corporates. So yeah, it's been a roller coaster ride.
It really has. And I mean, you noted that the demand for loans to fund small businesses surged last year. And I suspect this was to cover operating expenses because we just didn't see the reserve cash flow capital on balance sheet, not for growth purposes. How is this picture changing into 2021 from a year ago?
So the business owners are actually very responsible. So when lockdown happened, the level 5 lockdown happened, we saw a 90% drop in collections. We also saw a 90% drop in demand. So there was a drop in demand briefly for that period, but they needed to restart. So when things picked up and they had visibility on some turnover, they needed to then catch up, pay back wages, restock their stores, etc. So a lot of it was recovery funding more than anything else. And yes, different sectors have performed differently, as we said last time. There's some sectors that need growth capital. The home markets, they have a massive demand as people work from home as opposed to going to the office. They exercise at home now as opposed to going to the gyms. So they're buying gym equipment. So those guys are done well and required growth capital. Yeah. The hospitality industry has been hammered. We read all about the liquor being held for periods of time. The curfews have had a big impact where they have to close their businesses at 7, 8, 9 o'clock at night. And they needed just enough funds just to get through these situations. So what we're seeing now is, we're back to level 1. Certainly there's no liquor restrictions anymore. Curfew's been lifted slightly, so people can trade normally again. But I still sense there's a bit of negative sentiment in the market. And obviously we're leading up to elections now on the 1st of November, and there's often a holdback in investment. We're waiting to see the outcome of these things, rational or not, happens. And actually this is the time they should be investing for Black Friday coming up in November, getting ready for Christmas. Hopefully we come off the red list with the UK and we get the foreign tourists back in the country. So I think there's a lot of uncertainty in the space at the moment. So even though we're locked down level 1, there's still uncertainty and not a lot of negative press happening.
And, the problem for a business owner, I think as an entrepreneur, you are naturally an optimist. More on the realist or pragmatist side of that. You're not a Pollyanna thinking things are just always going to be good. You understand risk. And so if there is some uncertainty in the environment, if I don't have a line of sight on what my potential cash flows are going to be over the next 12 months, am I going to go into a fourth wave induced lockdown again? I think there is understandable resistance dip your toes back into the water. Let's just dial it back a bit. And I know it's probably an easy question. I'm sure you've answered this 1,000 times, but there are still some people who've never heard of retail capital. How do you assess a business before providing funding? And I always find this such an interesting topic because the banks have got this kind of formulaic, very grey-shoed way, and it's not really fit for the SME market. And has this metric changed over the years at all, even recently?
So we're fundamentally a cash flow based lender. Banks are typically asset based lenders. So banks want to know their security, that if they don't get repaid, they can go and claim security. And whether it's a car, a house, an invoice, something that they can get their hands on. And they're also very strict in terms of their legal constructs to make sure they can collect that security. We assess on cash flow. So we look at turnover history, which means we can do much quicker assessments. In some cases, we're pre-qualifying customers. So we work with partners who already have transaction level data of business owners. We can take that and pre-qualify them to say, in the background, you have a 50 or 100 or 200,000 rand facility available as and when you need it. So a bit like an overdraft. And all they have to do is accept the contract at that point to get the money out. And so we're much more responsive. The challenge with the banks, if you're going to go through some sort of secured lend, it can take 8 to 12 weeks to get a decision and a payout.
Oh, it's too bad.
If you want to get stock for Black Friday in November, you might get the money in February. You missed the boat. So that's where we play.
Yeah, absolutely. Flexibility, agility, being quick on your fleet. Your fleet and your feet, a bit of a Freudian slip there, but maybe you do have a fleet and you need to be upscaling that to take advantage of the tourist season that is hopefully going to kick. You need that flexibility. If you look at the current environment, can SMEs take advantage of the current market? Because we've seen some big companies innovate during the pandemic. We've also seen companies, big corporations, cut back, maybe focus on the core. So surely there's got to be opportunity around those ancillary services that maybe are outsourced now by big companies. Where do you see the opportunities for SMEs?
We're seeing a bunch coming through. So where some restaurant owners are suffering and closing doors, we're seeing in fact, there's a very, very well-known restaurateur in Cape Town who's just taking up multiple sites and putting new restaurants and new formats in. So taking advantage of the fact that there's vacancies or people not quite making it, picking up great locations, and in some cases taking funding from us to get these things off the ground in anticipation of a tourist season. We might not have a full tourist season this year, but next year we will have. So they're taking advantage of what's happening. The other big shift we're seeing is brick and mortar retailers that were forced not to operate in the lockdown levels have all gone online. So it's forced people to go and set up an online shop, set up online payment channels. Distribution has become a big thing. You can ship to anybody, anywhere in the country now. So online is the big shift that we've seen, and then also shifted from cash to digital. So I think Yoko did an assessment middle of last year, where I think they had sort of 10% of businesses were cashless pre-COVID, and that shifted to 25 to 30% of the business became cashless. So they refused to take cash. So that's the big shift we're going to see, which is permanent. That's going to remain.
Yeah, I've got a friend who's got a little baking business, and she's moved almost everything online, had to because of the pandemic, but has seen phenomenal growth as a result. And what is really just almost a sideline hobby, side hustle sort of business is now taking more and more of her time, and she can distribute anywhere in the world. And this is almost like a little home industries type business that is growing from strength to strength. So there is opportunity. And to your earlier point about the restaurateur, it's often at these times, isn't it, Karl, where vacancies are high, assets are potentially cheaper, human capital is certainly a little easier to come by just because of the environment that we're in, that if you go against the grain, you can actually set yourself up for future growth just by spotting those opportunities early.
Exactly. And competition is also lower. So the poorer operators have been taken out the market. So the better operators are surviving, and they've got a broader market to serve. And they don't have limitations on physical locations anymore. As you said, it's
absolutely. I just have to go. I just have to take a drive through some of my favorite neighborhoods around the parks in Melville to see how many prime locations are now with to let signs up. That has to be an
Yeah.
opportunity for someone who believes that even if we are going into a fourth wave, we are seeing vaccination rates start to tick over, and that there is light at the end of this pandemic tunnel. Now, often a change in how we see the world, something like a pandemic, a reboot of sorts, can change our behavior, can lead to new business ideas, just a new way of thinking about things. Have you seen similar patterns in the financing space?
We've certainly, I mean, as a business, we've digitized more. So our model used to be a face-to-face model, sitting with a business owner. Through the lockdown and because of COVID, we couldn't do so. So we've gone online. Our business owners have become more digital. So they're now using Zoom, and before they never even used computers. So that's changed the way we engage customers. We certainly have, where we were looking for partnerships that were taking long to bed down, that momentum just built through the COVID period. Everyone is looking for opportunity, and everyone is revisiting their business models through this process, which means you come out leaner and stronger with a better business model at the end. So not only has our business improved, I think many other businesses have gone through the same sort of evolution and revolution.
You mentioned digital payments earlier, and it's a fascinating space. There's so many players in fintech who are revolutionizing. You mentioned Yoko, and there are insurtechs doing amazing things as well. But in the payment space, surely there are only so many ways on your phone that you want to pay for your coffee at a cafe. And I find that I've got Zapper, SnapScan, and then I get in and like, well, there's almost too many. Is it actually worth it? Do I just whip out the card again? What's your sense on how much runway there still is to innovate in digital payments?
So we had a fascinating discussion with the ex-CTO of one of the large banks the other day. And he was saying that the banks are bringing sort of these super apps out where you can pay on a SnapScan, Zapper, all through one app, through the bank app. He says when he goes, he still takes the SnapScan out and pays by SnapScan as opposed to the bank app because the user experience is so much better. So our innovation, I don't think, is going to be in the technology. QR code payments exist now, card payments exist, mobile payments will exist. It's about the user experience. What are you most comfortable using at the point of transaction is the one you're going to use. So I still find if I want to pay for parking, if SnapScan's available, I'll use that. If I want to pay in-store for a large transaction, I'll probably take my card out. I feel more secure paying with a card. So there's a lot of innovation that's coming. There's certainly a shift that's going to happen going forward, something called RPP, rapid payments, which is effectively an EFT. It's what they call a push payment. So a card is a pull payment. I swipe my card, the merchant sends an instruction via the bank to go and collect money out of your wallet. And that introduces fraud potential and other things. Yeah. Push payment is essentially me pushing money to the retailer saying, I want to pay you 100 Rand. And that's going to be cheaper, less risky. So that's going to revolutionize payments to some extent going forward once it's adopted.
The user experience is a big one for me. And I just think going to a restaurant, I've got my two daughters with me. I want to get the bill and pay quickly because all of a sudden I've got to dash to the bathroom or something. And I don't want to be sitting there with a point of sale machine waiting for it to connect. I just find the user experience with those apps on the phone are far more convenient. Now, are you, I mean, you've got lots of clients in different sectors of the economy. Are you getting clients who think that they've got the next game-changing idea in the wake of the pandemic?
In payments specifically or in general?
Anywhere is, who's come to you, or are you not at liberty to divulge?
It's difficult to think of examples now. I mean, we get approached all the time with guys looking for funding to go and do something. It's hard off the cuff to give you an example.
Let's talk sectors maybe then. I mean, if you look at companies that have excited you in recent months, you mentioned hospitality, the restaurateur. What sectors are you seeing the most growth in at the moment?
I mean, so certainly the online space is a big driver, and I think that's an underserved space. So, I can talk. One of our big partners is PayFast. They're probably the largest online payment platform for small businesses in South Africa. They've seen multiples of volume go through them. We're going to see innovation with the likes of the Shopifys overseas. So the online shop portals, and then linking payments to it, and then linking funding to it. So As an online retailer, if you're selling, but you need access to cash flow for stock, just by virtue of transactions you push through, you'll get pushed funding. I mentioned the home market. The work from home is not changing immediately. Whilst offices are opening, they're typically only taking 50% of their staff back and they're rotating. And they also be more flexible, allowing people the option to work from home. And people are spending money on the homes. They want to upgrade their kitchens and their bathrooms and their studies and their desks and all those types of things because they want to be comfortable, because that's where they spend most of their time.
We're spending all of our time here. Exactly. You notice that crack on the wall. And it certainly comes through in the cash builds and the listed DIY retailers as well. Do you think a business is more likely to succeed inventing a new category or going and targeting an existing category and perhaps just doing it a little bit better?
When I have entrepreneurs approach me, and I mentor lots of entrepreneurs, it's always easier to take an existing category and do it 10 times better than it is to create a new category. Creating a new category requires education. Education is expensive. It's typically not the first person that invents a new category that makes the money. It's the second or third or fourth. So it always takes longer. It always takes more money than you think. Whereas the space we've always played in is, I understand the lending and funding space. It's been done for thousands of years. We just find better ways of doing it. So leverage data better, leverage technologies better, leverage mobile phones better. And it comes down to user experience we spoke about. How can we put funding in your pocket as a business owner without you even asking for it?
Absolutely. And
just by virtue of your behavior.
Not paying those school fees by being the first one in. Sometimes it is much better to be a fast follower, especially in an environment like this where people are iterating and moving so quickly. You don't know what is going to be that sticky piece of spaghetti that really sticks on the wall and actually becomes a successful new category, or do you become the next frozen yogurt fad that launches one season and is gone the next? How would you describe your leadership style? I know you're a strong believer in creating certainty in this climate of uncertainty and using culture as a catalyst for growth. I think that's been very difficult to do over Zoom, but how would you describe your leadership style?
I guess at the core of it is, if you treat people like adults, they'll behave like adults. And I've had experience both in the corporate sector and in the sort of startup sector. In the corporate sector, there are a lot of rules. So essentially, you treat people like kids in case they do something wrong. And it's amazing how when you treat people like adults, how they want to behave like adults and how they take responsibility. So that's probably the core of it. And the other thing is caring about people, but generally caring, being authentic. There are many guys who will talk the story, but don't walk the talk. That makes sense. But so give people responsibility, give them the tools they need, and then get out of their way. Let them deliver. And we've been very fortunate in our business. We've got, our executive team, pretty much everyone has been in the business or been with me in some form for at least 10 years, some as many as 22 years. So you know exactly what you're getting. You know their weaknesses, you know their strengths. No one has all the strengths and no weaknesses. But understanding what those are, you know what to cater for. And I tend to be a very hands-off leader and rather just give the responsibility. If you're hearing from me, then there's probably something wrong. If you're not hearing from me, things are fine. Don't worry about it.
Are you a big rugby fan, Karl? It's almost like you've described the way, and hearing what you say about empowering your staff, treating them like adults, being genuinely concerned for your teammates, like you've been sitting in or following the coaching of Rassie Erasmus and Jacques Nienaber, because that's what struck me about the development of the Springbok team, empowering players to analyze, to play what's in front of them. Yes, they've got a pattern and a style, but you could just see the way this group of players really play for each other, getting up against the All Blacks in a effectively dead rubber at the end of what has been a grueling tour in a bio bubble. That doesn't happen by accident.
Exactly right. I am a rugby fan, and they've done an unbelievable job with that team of players. We were unlucky to lose against Australia and the first test against the All Blacks. Some bad decisions maybe, but it's a great team of people, and I think Sear is a great leader. I think people play for him, and he's not a leader that wants to take all the power and ownership. He's very happy to delegate that to other senior players in the team, and if he doesn't have the answer, he turns to them. So the others are empowered in the process. And I don't know if you spent much time with Paddy Upton and Gary Kirsten.
Yeah.
And understood their journey with the Indian cricket team was very much the same. Positive psychology, focus on the strengths, not the weaknesses, and empower the individuals to better their own games, not come looking for direction all the time from the coaching staff.
I think it's a fantastic recipe for success. I love the book Barefoot Coach, Paddy Upton's story of how he actually got into that position. He's a big surfer as well. I don't know if you surf, Karl, but
I wouldn't call myself a surfer. I'm more a trail runner and a golfer and other things.
But it's, I must say, it has been fantastic just getting your insights through the last 18 months, through a pandemic that has ebbed and flowed, changed things for small businesses, created opportunities, created challenges. But really, it does boil down to your concluding comments there about empowering people and having a belief in your system. And that's really a great recipe for success. Thanks for sharing your recipe with us here on Business Talk.
Thank you, Michael.